All right, what's up, everybody? So this year will be my third end of the year holiday trading season. My first year back in 2019, I had no idea really what was going on or what was supposed to happen. I was a newbie back then. I decided to trade during that time. Big mistake. It wasn't until the second year, when I had way more knowledge about the markets and how all of this works, that I made the hard decision to stop trading holidays altogether. Now, this applies to all holidays that affect the US dollar, like Veterans Day, Labor Day, President's Day, so on and so forth. Basically, any holidays where a significant amount of people are off from work and the banks are closed and not making transactions. But I would say the absolute worst time for trading is the end of the year holidays, which include Christmas and Christmas Eve, New Year's and New Year's Eve. These holidays come back to back right after each other, during a time where people are traveling to see family, maybe taking a trip overseas somewhere, getting their next year business plans together, and again, the banks are closed for business. All of these factors make for a very, very choppy market. I've noticed this on regular holidays throughout the year, that if the banks are closed, the pairs typically won't align very well as far as correlated pairs, and the patterns that I tend to trade won't show up as well either, if at all. Usually what happens during the holidays is the market will get stuck in a range with very low trading volume, leaving little opportunities to make any money. It can still be done, but I honestly have many more losses than wins trying to trade in such a dry environment. Great trades are made from momentum, and if no one else is trading and the banks aren't performing their usual transactions, that momentum just simply isn't there. Retail traders like myself, and probably you, anyone who's trading with less than $1 million, we have our place in the market, but we aren't causing any huge movement like the banks are, which transact much larger accounts than we do. On a normal business day where everyone is present and trading, the Forex market trades $6.6 trillion daily. If you take out the banks from that equation, the number is significantly less. So back to the end of the year holidays, which are the main topic of this video, I've noticed that the trading volume certainly starts to go down a couple of days before Christmas, usually about 3 days, just depending on what day of the week Christmas actually falls on. You can look back at the market action for these days in the past, and you'll see the same issues that occur on any other holiday throughout the year. Very low volume, choppy movements, patterns form very sloppily, if they form at all, and a lot of pairs will be stuck in a range. Correlated pairs, for example, the GBP USD and the Euro USD against the dollar, probably the most simple correlation out there, doesn't even move the way that it naturally would. So from there you have Christmas Eve, absolutely dead market for that day from what I've seen. Christmas Day, same thing. You will most likely just end up losing money trying to trade on any of these days. And then after that, you have the couple days between Christmas Day and New Year's Eve. Same thing here. People are traveling. Employees are taking time off from work. People just not having to work. A lot of companies will give their employees time off at the end of the year to give them rest and prepare for the new year. So these days have a little bit more action than an actual holiday, but it will still be a more difficult market to trade than usual. Forex trading is always a challenge, but there's no reason to add to the challenge by trading in low liquidity environments. All in all, these couple of days should also be avoided if you're trying to protect your trading capital, which you should be doing anyway. And then comes New Year's Eve, where people, even the bank employees, are likely either relaxing or getting the party started early. Day trading, it attracts a certain type of person. Typically, if they're anything like me or Leonardo DiCaprio in that Wolf of Wall Street movie, they like to party every now and then. Nothing wrong with having some fun within reason, of course. You don't want to go too crazy and get yourself into trouble, but what better time than this? The more experienced traders who have been trading for a couple of years are making big money, private jet, Ferrari money. And I'll tell you from my own experience, the pain and loss that you have to suffer through in order to become a good trader. When I personally start making private jet Lamborghini money, I will most definitely be partying the entire time that I'm talking about in this video. Pretty much the entire last 2 weeks of December and probably even the first week or two of January. So I have a feeling that this will begin in 2022 for me. I'm not 100% sure, but I have a feeling. But back to the original topic, New Year's Eve, of course, spills over into New Year's Day, which is still an actual holiday. Expect more of the same trading conditions on this day as well. Then we have the next couple of days after New Year's. I assume a lot of people are probably recovering from all the partying and traveling that they've likely been doing for the past couple of weeks. At least 3 days after New Year's, the market is not in tip-top condition yet. I would say around January 4th is when things start to get back to normal. So to recap, we have the 2 or 3 days before Christmas all the way through until the 2 or 3 days after New Year's, where the market environment in general is not in a condition to be trading, and it will certainly be much more difficult to make any money. So that's about 3 weeks worth of time where it's not recommended to be trading, which is a long time, and that kind of sucks. But I've come to the point where I trade every single week, and I admit I do get a little bit upset during times where I can't because of the holidays. You could look at this in a bunch of different ways. I usually try to find the most positive, realistic way to look at things. At this point in the year, for experienced traders, you've been trading every week for an entire year. The only other extended holiday is Thanksgiving, which is a similar situation to this. It's about 2 or 3 days of choppy, low volume trades. But other than that, and other than the single holidays here and there, trading an entire year is actually pretty exhausting. So during a normal week, I'm super excited to trade Monday through Wednesday. Thursday, I start to get a little bit winded, and I can definitely say by Friday's session, I'm ready for a break. So this isn't physically hard work that we're doing, but the amount of brain power that you use during a trading session, making all your lot calculations, analyzing the market during the pre-market to look for possible trade ideas, keeping track of 20 plus pairs, indexes, managing your trades once they're open, managing your risk. All of it is very draining after a couple of days or after a couple of weeks in a row. So having a couple of weeks to relax and recharge is actually a good thing. I've noticed my trading has improved significantly since I've started. I'm now at a point where I feel comfortable in the markets and I feel like I'm in control of what I'm doing. At this point, losses don't affect me at all. I see them for what they are, and it's little to no emotion when I take a loss. There's no such thing as a 100% win rate strategy in trading, so these are just a part of the game, and I realize that now. A good comparison would be those zookeeper people. You ever go to the zoo and you see the people in the cages with the crocodiles? I'm sure their first, probably even second year of doing that is just pure terror. This thing could obviously mangle them and maybe even eat them if it wanted to, but they learn their way around. They learn what to do, they learn what not to do. They might even get bit every once in a while, but after enough time and experience, next thing you know, they walk into the crocodile cage like they're walking into Walmart. So it just becomes a normal thing to them after a while, and this is how my experience has been with trading. I'm no longer scared, I'm no longer hesitant, and I really enjoy and even look forward to each new trading session. So from now on, I will just take this end of the year holiday season as a built-in vacation for me as a Forex trader. Rest up, recharge, relax, and get prepared for the new year with all of the new trading opportunities that it will bring. Basically, all federal holidays are built-in days off for Forex traders. All right, so that's all for today. I'd like to know your guys' opinion on all this. Are you happy about these built-in days off? I guess there's not much we can do about it anyway, so we might as well be happy about it, but I want to hear what you have to say about it anyway. So leave me a comment on the video, or you can catch me on Instagram and Twitter at ccx_collective. Happy holidays to everyone. Get some rest, and I'll see you guys later.